Welcome back to Everything Money. We're glad you joined us for another video. Today we're talking about Google. We talk about a lot of different companies, and everyone loves this one, Paul. They revolutionized the way you look up stuff on the internet. You used to be a very huge fan of Ask Jeeves. I know you were.
So this is an interesting story about Google.
Go on.
My money was parked at the company that took Google public, and I was offered shares in the IPO, and I said overpriced.
Come on.
I didn't buy it because it was an overpriced IPO. It was $60 a share back then. What's Google currently at?
$27.25. Oh my Lord.
$2,700. So guys, that's the thing I've learned over the last 15 years is just because a company's overvalued, I used to be staunchly not a growth guy. I don't factor in growth. Now, part of value investing is factoring in growth, and that's what I didn't look at. But even if I were to go do Google all over again, I probably still wouldn't have bought it because I don't believe in IPOs. But they just reported earnings the other day.
Yes.
If you go to the news section of our website, everythingmoney.com, click on Google revenue surges, 62% jump in revenue. The software takes a few days, obviously, to update, but we're gonna take a look at Google now and see where they stand. Oh, actually, they already updated. Look at that. So let's go look at the Google overall.
What's the market cap for this gigantic
$1.8 trillion, Uncle Seth.
1.8 trill.
But PE of 29, which is an X.
A little high.
Profit margin of 29% though, check mark there. No dividend, which I imagine Google will probably start paying a dividend at some point in the future because they're generating so much cash. There's only so much you can do with it. Will they buy back shares? I don't think they should buy back shares at 30 times earnings, but it's a possibility. Look at this return on assets, 20%, and return on invested capital of 12%. And look at all the momentum numbers, 25, 50, 100, 200, 300-day moving average. It's crushing all of those.
We're going to continue with our 8-pillar analysis. If this is the first time you've ever seen one of our videos, we use these 8 pillars to analyze a stock, the numbers behind a ticker symbol, and this might resonate with you, so stay tuned. Paul, let's look at revenue growth over the past 5 years. This is pillar number 3. 103
to $219 billion. That's huge. Profit?
Pillar number 4, profit growth?
19.34 to 63 billion. Yeah, that's incredible stuff.
Is it me or has Google even really got going? I mean, they have so much planned. Sven Carlin did a video about spawning and how Google is just, I love their email interface.
Well, look at YouTube. YouTube owned by Google. The top 2 search engines in the world are Google and YouTube. I mean, right now, if you ask anybody, how do you learn? What are they going to say? I go to Google and YouTube. Yes. Whenever somebody asks me a question, my sarcastic response always is, I wish there was a website we could go to where we type in a question, it would give us an answer. And that's what I say. But, I always said that tech was cyclical, which I do believe that. However, as time goes on, the old tech companies become the blue chip companies. I think Google's gonna end up becoming one of these blue chip. I mean, what's it gonna take for somebody to overtake Google's search and their video services? What's that gonna take? YouTube has over 2 billion active users per month and growing. The world's 7.5 billion people. How many people in the world don't even have a computer yet? Mm-hmm. I mean, it's absolutely unbelievable. So, shares outstanding. They are buying back shares, Seth, but not by much. 691 down to 668 over the last 5 years, so it's still a check mark. And this software, guys, it's incredible software. It's available. It was created because our patrons asked for it, our users asked for it. What we do is we have a mobile app. We have 8 pillars. You have 30 years of financial data, stock analyzer tool, daily content exclusive for people who get the software, access to us, real estate calculator. Biggest thing here, Discord community. You can talk to 4,500 other investors about your ideas. It was $8 a month before. It's on its way to $49. It's only 80 cents a day today. 80 cents per day, guys. Less than $1 a day versus $200 a month, $200 a month, and $35 a month. And look at all the things you get versus them. No brainer. Join our Patreon, the link below. Join our community. This is only going up from here.
Yes, you can have this software right now and joining our Patreon. The link is in the description below. And if the numbers resonate with you, you can have this right now. And the patrons are loving it, Paul. You know that. So let's look at the free cash flow, our current assets.
These mofos have $172 billion in cash on their balance sheet right now, and $55 billion in current liabilities, and total liabilities of $97. Guys, listen to me here. Mm-hmm. They can pay off all of their debts for their entire company and still have $80 billion left over.
Incredible.
Now, you usually take out the market cap, but in this situation, the market cap's $1.8 trillion. What's $80 billion amongst friends when you're worth $1.8 trillion? So I don't even factor it in there.
Free cash flow growth is pillar number 7, siete.
Siete. Okay, let's go here. Now, this one, has not updated, but still look at the big growth here, 27.6 to 50.4 with an average of 31 times 20 is $620 billion, which is 1/3 of where it's at right now. Guys, this is way too low. Even though it's an X, this is insane. That would make the company sell for basically a 9 PE. This is not a 9 PE company. So what does that mean for you? That's why we have the stock analyzer tool. What we're gonna do after Mo looks at the charts is we're gonna put our data in our stock analyzer tool, factoring in our growth, factoring in share buybacks, factoring in everything we need to see what Google is worth to us today.
Yeah, Paul, in terms of growth, I mean, it seems like, they already have replaced Microsoft Office with their Google Docs.
They have not replaced Microsoft Office.
But they could, Paul. How about they could replace Zoom with their Google Meet? I mean, if they tinker with this stuff, they can continue to take over.
Remember, they also had, what was their social network besides Facebook to compete with
Google
Facebook?
Plus.
Google Plus.
Google Plus.
How'd that go?
Flop.
It flopped.
Listen, I do think Google Drive is phenomenal. I do love it. But at the same time, I don't think Microsoft's usage of their Microsoft Office is decreasing anytime soon.
Google has come out with a lot of products. Like, remember they had Google Chats or whatever it was called, Hangouts. Like they offer a lot of products that they try to compete in that area.
Trying.
But they're also ones to be like, okay, this doesn't work.
To
On
me,
the next.
it's search.
Yeah.
Search leads to advertising dollars. Advertising dollars is everything here.
Yeah.
YouTube is everything for them. They paid $1 billion for YouTube, I think. I mean, that thing generates like $15 billion a year in revenue or something crazy like that.
Mo, are people trading Google in the Bidnass Nation, the Patreon tier?
I mean, if you look going back to October of 2020, it came through the sweet spot, and it's basically been in the sweet spot, in the overbought area, just going up like a power stock with the exception of a few blips. Maybe that was earnings or something that brought it down for a few days. But let's go to the daily chart and pull up all these moving averages. So you can see that you're overall 4 of your major moving averages, and you've been there for a long time. So this is a power stock, and with what came out on earnings, if they add and make a brand new all-time high, keep going with it. This is a power stock. This is what you look for. A stock that comes through the sweet spot, gets in the overbought area, and just goes sideways while the stock price just keeps going up, up, up.
What should we be paying for Google in terms of a stock price, Paul?
So guys, whenever I look at a company like Google, which is a large company that has a lot of staying power, I look at a 7-year analysis. So let's scroll down below. Now, this will show your 1, 5, and 10-year numbers. They grew 19.8% a year for the last 10 years in revenue, 22% for the last 5, 32% last year. Share change, also here. Profit margin here. Free cash flow as a percentage of revenue here. PE, price to free cash flow, and your desired return. Now guys, one thing I want to focus on here is PE. The current PE is 29. As the company gets bigger and bigger and bigger, it's going to be harder to grow. Fast-growing companies should get a higher PE. But as the growth slows, it should get a lower PE. So I go very conservative on the low end, because remember, your job as a value investor is to be conservative and see where the number falls. Now that doesn't mean you should buy it at those prices. You can probably pay more, but it's just to give you an idea of where the stock falls. I made these assumptions. The biggest ones to focus on are the growth levels. I put 10% for the next 7 years, 15% as a middle, 20% for the high. Going all the way down, I hit the analyze button, and our prices are between $1,000 a share and almost $4,000 a share. You might sit there and say, oh my God, that's a huge difference. Well, it is, because we also have 10% revenue growth here versus 20% here. Now, the cool thing is, Seth, it's not as far off from the prices I would have thought.
Yeah, last October, Google was $1,400.
I mean,
this is absurd.
That's a pretty good number. And we didn't have our stock analyzer tool then. If we did, I might have been buying the stock back then.
Yeah.
So the whole point is, I don't think Google's that overpriced. I do think even if you bought it today, you might be able to make some decent returns. I don't think you're going to beat the market with buying it today. However, if you make these assumptions of 15% revenue growth, I'm still a believer in Google somewhere between here. I do believe it's probably a mid-teens price for me to feel comfortable buying it to beat the market. If you don't need to beat the market and just want to buy something worth the market, maybe low 2000s. It's not far off. You might sit there and say, Paul, it's not going to drop 20%. Okay, well then you don't pay attention to history.
Yes.
We just went over Baidu, which is down over half. We went over Alibaba, which is down like 60%. You go look at history. Microsoft, Intel hit $75 a share in 2000. It has not hit that level since, and it's 2021. These things will happen. You'll be able to buy great companies at better prices. You don't need to buy it you don't need to buy Google if it's worth 2000 at $500 a share. You need to buy Google if it's worth 2000 at $1,500 a share, and you'll be able to.
That is our take on Google. Interesting company, as always, one of the bangers we always love. I love searching everything on Google, and I will continue to use my Google Docs, Paul.
Remember how
Google
complicated
Sheets.
Yahoo was? You go to it, it's got all this news everywhere. Now Google is just like, type it in. I remember where I was the first time somebody told me about Google. I was in the Michigan Fishbowl at the University of Michigan in the computer lab, and a friend of mine named Chris said to me, I said something about going on the internet. He goes, why don't you use Google? I'm like, what the heck's Google? I never stopped since then.
It's incredible.
Ask Jeeves was dead to me then.
All right, rest some pepperonis. Fondle the thumbs up on the way out. Join the Patreon and join us for our next video. Thanks for watching.